Hi, my name is Jalyssia Hancock, and I will be doing a financial analysis of oil and gas industry and the home builders industry. The objective is to analyze 5 companies of the oil and gas industry and 5 companies of the home builders industry to determine the overall position of each company within both industries and selecting the strongest company, and to determine the overall best company between the two industries. The ratios that I will be using are the following: current ratio, the equity multiplier ratio, the total asset turnover ratio, the profit margin, return on assets ratio, return on equity, and the price earnings. In determining the overall position of a company within a certain ratio, the net effect has been calculated. Direction and magnitude difference between 2008, 2012 through 2012. These differences are then summed together and determine the directional movement of a ratio. The companies assessed within the oil and gas industry is the Hancock Offshore Services, Secor Holdings Inc., Tidewater Inc., Gulfmark Offshore, and Halliburton Company. First, I will be using the current ratio, which is a comparison of current assets to current liabilities to assess a company's ability to pay its short-term obligations. In recognizing strong financial positioning, this ratio is generally preferred to be higher. In comparison, based on the current ratio, Gulfmark Offshore Inc. had the greatest liquidity and is more likely to attract short-term investors with steady annual increases. It had the highest current ratio of 3.82 for 2012. This means for every dollar in liabilities, Gulfmark Offshore has $3.82 in assets to cover debt. Next is the equity multiplier ratio, and this determines a company's extent of leverage by comparing total assets to total equity. Based on the equity multiplier, Tidewater Inc. had the least amount of leverage in purchasing its assets with a ratio of 1.6 in 2012, but Gulfmark Offshore is decreasing their extent of leverage more quickly than their competitors. Next is the total asset turnover ratio. This measures a company's efficiency in converting their assets into revenue by comparing sales to total assets. This is generally preferred to be higher. Based on the total asset turnover ratio, Secor Holdings Inc. has the highest average change between the 5 years and highest total asset turnover for 2012. This means that they are converting their assets into revenue more efficiently. Next is the profit margin ratio. This indicates a company's cost efficiency by comparing net income to total sales, and this is also generally preferred to be higher. Based on the profit margin ratio, all industries displayed a net decrease of over the 5-year span. Halliburton Company has the highest average change and has the highest profit margin of 0.092 in 2012. Next is the return on assets ratio, which is a measure of how effectively assets are being used to generate profits. Based on the ROA ratio, all companies showed a net decrease 5-year span. Seacor Holdings Inc. has the smallest decrease in ROA. This company is effectively controlling costs and increasing profits in respect to its assets better than their competitors. Next is the return on equity ratio. This shows the profitability that a company has for shareholders. Profit margin, total asset turnover, and equity multiplier is considered to confirm that ROE is measured by the efficiencies of management and is not simply being inflated by factors such as leverage. And this is one of the most reliable tools in assessing a company. Based on the ROE ratio, all companies displays a net decrease over the 5-year span. Seacor Holdings Inc. has the smallest decrease of all 5 companies, but Halliburton has the highest ROE in 2012. And lastly, price-earnings ratio, which is a measure of how the market values a company and investors believe in future prospects or substantial growth. And this is generally preferred to be higher. Based on the price-earnings ratio, Seacor Holdings Inc. is regarded by the market as having the most growth potential amongst its competitors. In conclusion, of all 5 companies, Halliburton Company is the strongest company and best company to invest in. Its ROE ratio is the highest in the industry and is being driven by total asset turnover, showing the efficiency of management and deleveraging of business. Companies assessed within the home builders industry: Toll Brothers Inc., D.R. Horton Inc., Lennar Corp., KB Home, and Standard Pacific Corp. Based on the current ratio, Lennar Corp. has the greatest liquidity with a current ratio of 13.95 in 2012 and is more likely to attract short-term investors with steady annual increases. For every dollar in liabilities, Lennar Corp. has $13.95 in assets to cover their debt. Based on equity multiplier ratio, Toll Brothers has the least amount of leverage as of 2012. However, Standard Pacific Corp. seems to be decreasing their extent of leverage more quickly than their competitors. Based on the total asset turnover ratio, all industries displayed a net decrease over the 5-year span. KB Home had the smallest decrease in total asset turnover, showing its effective minimization of the downward sales effect on the industry. KB Home also had the highest total asset turnover ratio in 2012. And based on the profit margin, all companies showed a net increase over the 5-year span. Although Toll Brothers displayed true cost efficiency with the highest profit margin of 0.259 in 2012, Standard Pacific Corp. had the highest increase in profit margin over the 5-year span. Based on the return on assets ratio, all companies displayed a net increase over the 5-year span. Standard Pacific Corp. has the highest average change and has the highest ROA in 2012. This company is effectively controlling costs and increasing profits in respect to its assets better than their competitors. Based on the return on equity ratio, all companies displays a net increase over the 5-year span. Standard Pacific Corp. has the highest average change and has the highest ROE in 2012. Based on price-earnings ratio, Toll Brothers is regarded by the market as having the most growth potential amongst its competitors. In conclusion, of all five companies in the home builders industry, Toll Brothers is the strongest company and best company to invest in. And out of the two industries, I believe that Halliburton is the strongest, and because it seems to be the strongest out of all 10 companies analyzed. Thank you.